Yeah, hi everyone. I'm actually right next to the Statue of Liberty. It looks like it's really close to me, and in this video, it looks like it's 500 miles away. But that's the Statue of Liberty, and back over there, I think you can see it. Yeah, that's the Freedom Tower. So I'm way down by the waterfront here. That's the refineries and port, and then way behind me is you can't really see it, but there's Verrazano Bridge, and these are all warehouses, old warehouses. It's back there that's all, Linden Refinery and all those guys, Bayway, New York Harbor. And in fact, those are all barges. Those are all, now I'm getting excited, those are all oil barges. Don't know if you can see them, but anyway, happy week. Market's ripping today, which is interesting. A little bit of a bounce back after I think it was 6 or 7 consecutive days of declines. But it feels like oils might just stall out a little bit here for a second in terms of the massive companies that are reporting this week, and we'll just see. I mean, I see Goldman is out, I think, humping Amazon, for example. I think they report this week, don't they? Or is it? No, it's next week, isn't it? Either way, these Mag 7 stocks that are reporting this week, the most dramatic is obviously going to be Tesla. But you also have Microsoft and Apple. And then we have to wait a couple of weeks for Nvidia. But basically, big reporting week for stuff that isn't oil until we get to, well, oil is the correct word, until we get to Exxon and Chevron on Friday. Phillips 66 Friday going to be interesting. But before that, we're going to do some natural gas stocks and Halliburton tomorrow. So tomorrow, Tuesday, is going to be all about, how bad the US gas market is and how much activity is declining in the US, and we'll hear more about that. Our general observation on Halliburton is it tends to underperform out of results regardless. That's a pure quant screen, and the outlook is kind of tough because this capital discipline is real, and the very low natural gas price is very real as well. And in fact, we published yesterday the EIA showing that they believe that you could be in an above 5-year average storage tape right through 2025 here, believe it or not. And being above the 5-year average in storage terms tends to be bearish, needless to say, for prices. So natural gas looks pretty rough, it has to be said. But from a volume point of view, it looks great because ultimately we've had all-time record demand for power generation. One of the interesting things about the natural gas market now actually is that the scale of these LNG projects is so massive that when they go down, they really cause a problem in the gas market. And we're seeing that with the rather dodgy performance of Freeport, because it's 2 BCF a day when it's running, which is a lot of gas. And then it has the tendency to fall over or even burn, which it really causes ructions in the gas market just because of the sheer scale of these things. And, there's a little bit of be careful what you wish for with big LNG exports, because they although they're very simple things, they're giant refrigerators, they can fall over, and you really don't want to take any risks with them. Obviously, counterintuitively, they're not that explosive actually, because, well, the ultimate product is not explosive at all. LNG is frozen. But anything that involves natural gas, obviously, and they succeeded. Well, I shouldn't say succeeded. They had a fire themselves, Freeport, a couple of years ago. So just adding volatility to the gas market. Anyway, I'm rambling on here. In terms of what else we're seeing, it feels like oil has kind of had a big run and is now digesting this war by appointment that you're having between Israel and Iran. So the potential for a major conflagration there seems to be in nobody's particular wishes or interests, which is good news. And we always felt all through all of this drama that the importance of Iran in supplying China, and to an extent India, and I think the US will liberalize sanctions, busting in terms of allowing maybe more Indian, Iranian oil to get in, although the Iranians aren't doing themselves any favors. If the Iranians and Maduro in Venezuela would just get in their lane and start behaving like real leaders, the US would let them off the hook pretty quickly. But the fact of the matter is these people are really seriously corrupt idiots. And unfortunately that makes for bad rulers. So Iran and Venezuela both suffer horribly from, their leadership, which is just ghastly. Anyway, that's all rambling on. So this week, we're not that thrilled about the oil tape. We're interested by the wider market reaction. There's not much Fed announcement this week as well, interestingly. So there's going to be a focus on the fundamentals of these big companies reporting, the Microsofts, the Teslas, Tesla, no-brainer, is going to be very negative. But these things like Amazon Web Services, Microsoft's web stuff is all booming, and the market may well, go back to buying itself because of the strength of the U.S. economy, as opposed to fretting that there's inflation because of the strength of the U.S. economy, which is driven by debt dollars anyway, and the debt is basically out of control and getting worse every day. So, the market can take it both ways. Yay, strong economy, great profits, or whoops, this is all just a massive government spending boom that should have long since been massively curtailed and is no way going to get curtailed in an election year. Therefore, inflation will stay high. The Fed will have to keep interest rates high, and all these long tenor growth stocks, such as Nvidia, will be structurally pressured by basically little in the way of Fed cuts this year, based on what's going on out there right now. And as you can see from the barges in New York Harbor here, the economy is pretty much booming. In fact, this is a really obscure area, and look, there's 4 tourists come down to look at a few warehouses. All right, have a great day.